Hello traders and welcome to another video review. Today is Monday, April 7th, 2025. Let's take a look what do we have in the economic calendar for today. Not too many very important data releases. Apparently, no very important data releases, but we do have some of the medium important data releases. So, what do we have? Halifax house price index data from the UK deteriorates even further from minus 0.2%, minus 0.5%. German industrial production down from 2% to minus 1.3%. German trade balance up from 16.2 billion euro to 17.7 billion euro. We are waiting for the retail sales data from the Eurozone. The market participants expect an increase from minus 0.3 to 0.5%. Then at 11 o'clock we got mortgage rates from the UK. And at the end of the day we got Bank of Canada Business Outlook Survey scheduled for release at 4:30. Very short calendar after very busy NFP Friday, so without any further ado, let's just switch to charts. We'll start with euro dollar. Euro dollar daily time frame chart is showing us a very nice spike up to the target of the wave 3 1.1147 and then the spike down to 1.0882. So the wave 3 is now done. It has been completed apparently, and now we are doing the correction in wave 4. As you can see, there is still wave 4 to be developed, and there is wave 5 to the upside to be developed. We got the very nice movement towards 1.0882. Now the market is trying to bounce a little bit higher. Obviously, we got the local trend line that can be seen here. So let me just mark this trend line in black so there is no further doubt that what is going on. This is 4-hour time frame charts. Short-term trend line to the downside is preventing the bulls from rallying higher. As you can see, the bulls are going were terminated during the extremely overbought market conditions. Now the bears push the price lower, and now the bulls are back trying to move higher again. The technical support at 1.0953 didn't actually prevent the market from falling lower. However, let's just mark this zone as the technical support. The next one is 1.0847. Overall, the outlook remains slightly bullish. However, please notice that the wave 4 correction might even reach the previous wave 4 level, which is 1.0732. This is a bigger cycle. It might be more complex, more time consuming, so please be prepared for up and downs here at the euro dollar. Because we got some data from the UK, let's take a look at the cable. And if we take a look at the first daily time frame chart of the cable, you can clearly see that we got very interesting pattern here. The biggest daily movement to the upside was done on April 3rd. The biggest daily downswing was done on April 4th. So this pattern here alone is telling us that something is going on the cable. So let's just investigate further. The key technical resistance, the gate to the upside is 1.3433, and the key technical support is located at 1.21. Basically, this is our range, and this range will be considered. The highs were done in September 2024. The lows were done in beginning of the January, in the middle of the January 2025. Since then, very nice movement to the upside. We can even mark this movement technical way by implementing the channel. So let me just do this channel here. On this daily time frame chart, we can clearly see that the last swing high was done at the level of 1.3206. So we will mark it as the technical resistance, and this pattern, which is basically a bearish engulfing pattern, might indicate that some sort of the big supply came to the market. You can take a look here. We on the RSI, we reversed from the extremely overbought conditions back down towards the level of 51 straight on during 2 days, yeah, 2 days of trading. So far the local low was made at 1.2827. Then this is the next target. It looks like this is the next target, 1.2714, but this is weak technical support, but on the edge of the channel, just a little bit above the 100 periods moving average. So for now the outlook remains more bearish than bullish, and if we break below the level of 50, which is the neutral level on the RSI, we enter the bearish territory, bearish sentiment. So that might be exactly after the market will be trying to break below the lower channel line, or it will actually break below this level. Obviously falling out of the channel is bearish. Breaking the 1.2714 technical support level is even more bearish, and breaking below 100 periods moving average 1.2628 is even more bearish than it is already. So if bulls want to keep the pace of this upside movement, they need to defend the channel, defend the trend line, defend the moving average. 3 technical tools. We will see how the market will actually react on this situation when the price gets there, if the price gets there. However, be careful with the be careful bulls, because it is really something here, really serious candlestick pattern on a daily time frame chart. That's important indication of a possible sentiment reversal. So we got the British pound, we got the euro, dollar. Let's go with the majors, US dollar to the Japanese yen. Now, daily time frame chart, what is going on here? On a daily time frame chart, we got the false breakout inside of the channel. Remember this, we've been analyzing this one for quite some while, and then when we broke above the trend line, then we tested it, but there was no follow through after the test. There was a red candlestick, then it was some kind of a pin bar candlestick with a long upper shadow, and then breakout down back below the trend line, even below the low of 146.57. New swing low 144.57 means that the downtrend is being continued. There is still some room to the downside on the RSI on the daily time frame chart. There is still some room to the downside here as well. So all of these red levels we got on our daily time frame chart are still valid. Next target is swing low from the September 16, 2024 at 139.59, and it looks like the market really wants to get there. We are below the trend line, below the 100 periods moving average, below the last swing low, and below the technical resistance right now as well. Minor technical support is 141.66, but it's too close to this one, so the bears might want to test the one as well. Let's take a look at the S&P 500. You can take a look at the 4-hour time frame chart, because it looks like the S&P 500 is falling down like no tomorrow. After we broke out of the channel, then there was a failed test at 5,700. Right now S&P 500 is trading below $5,000, roughly around 4,839. This is a really significant development. If we go ahead on the weekly time frame chart, I don't know if we will be allowed to do this. The weekly doesn't actually works very well. Let me just go with the S&P 500 again. M30, it's obvious. 1-hour time frame chart looks like this. Maybe some sort of the temporary bottom was found at 4,800, but it looks like the market is under very big pressure. The daily time frame chart still doesn't actually works very well, because if we switch to daily, you can see that there is no data here, and the newest data here 4,800. So actually you can take a look, it doesn't plot the data for some reason, so which is why we simply will abandon this. And let's go to the Bitcoin. The Bitcoin is actually falling exactly where we want it to fall. apparently. We got our demand zone, key long-term demand zone on the chart. We got this for the last weeks, and we know that if there is a breakout below this demand zone, the whole uptrend on the Bitcoin might turn into neutral and then very, very quickly into the bearish trend. So right now we have a new swing low on the Bitcoin as we speak, 75,222, and we are approaching the demand zone. The demand zone is located between 73,753, let's say 69,121. All right, so somewhere there might be increased bullish activity if bulls wants to defend this long-term demand zone. This is what we are talking about. This is how this demand zone has been established on the weekly time frame chart. Weekly is already negative. Weekly is already negative. We have not been here. Last time we've been here in 2023 on this level. So you can see last time we touched this level 40 points was 2023, the beginning of the 2023. So that's a very significant movement to the downside. The market might test even $70,000 level here on the 4-hour time frame chart. Rejection on the supply zone, back below the trend line, back below the 100 periods moving average, and after the 81,140 level technical support tested at least 2 times, was violated by this candle, 4-hour time frame candle. The result is very, very significant. We are down towards 74,460 these days. So please, we are still moving lower despite the extremely oversold conditions on the 4-hour time frame chart, 19 points only. It looks like we will hit the first technical support level, 73,844 in no time. So please stay focused, stay vigilant. Bitcoin is losing the gain. So what is actually gaining? Is it the US dollar? No, the US dollar is not gaining any strength. As you can see, the US dollar is testing the broken technical support. Now it's a resistance 103.19, and it was rejected twice already. So American indices are down, and they are going down. Gold, Bitcoin is going down. Gold is going. Gold is not doing much, but there was a quite significant movement to the downside just recently. So we got this this ABC movement as we expected it towards the lows of the previous wave 4 on and even below. So the gold is actually still in the corrective cycle. It looks like this corrective cycle might have been completed. Yeah, we got ABC to downside, beautiful zigzag. How there is a bullish engulfing pattern here from the extremely oversold conditions on the 4-hour time frame chart. However, gold is not rallying. It's being suppressed by the 3056 technical resistance and the 100 periods moving average. So gold is not doing much apparently. Bitcoin is going down. Indices are going down. Euro dollar, as we remember, is going slightly up, but the US dollar index is not going up, and the gold is not going up that strong as the other markets. So very interesting situation. Stay focused, stay close to the market. It looks like something is cooking and might be very, very interesting day today on the market. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.